Welcome back, and this is another segment from our first segment, and we are still discussing next week's event. That is the Capital Markets Economic Development Forum. Now, remember to follow us on Twitter or X and get us that feedback. In case you have any questions, we'll be able to get those answers. But also, you can give us comments in the comment section on our YouTube channel. We'll be very happy to help you answer them. I'm with Mr. Dickson Ssembuya, and we are looking at what are some of the expectations from this event. And the theme for this year's Capital Markets Economic Development Forum is the financial markets as a complementary platform for funding the tenfold growth. Now, we've seen in the first segment what this tenfold growth is under the vision of the president, the 2040 vision. We have a number of sectors that we are looking at, and we are looking at growing at least 10 times our GDP, which is currently at around 50 billion, and we're looking at growing it to over 500 billion. But how are we going to be able to finance this? How are we going to be able to fund this? One way we are looking at the fixed incomes, and this is going to be the main point of discussion on this particular event on Wednesday. Now, Mr. Ssembuya, when you look at the fixed income space, how, in your view, because since you're also into research, you could be knowing how has this market penetrated the public in Uganda? How far has it reached when it comes to people who are investing actually in these fixed incomes in Uganda?
Okay, thank you. Now, at the moment, the bulk of the bulk of investors within the fixed income space is majorly made up of institutions such as banks, insurance companies, and the pension schemes. They hold the bulk of fixed income or fixed income instruments issued when say the government borrows. But there are plans to bring on board retail investors, people like me and you. Okay, there are plans underway at the moment to take these fixed income instruments, interest-bearing instruments, to people like me and you, because I think yes, I may not be a bank, I may not be a fund manager or a pension fund, but I still have some money that I can save. And I think if so many of us save,
Yes.
then that can contribute to the whole. Okay, so outreach and other initiatives are currently in progress to try and bring on board as many retail investors as possible, so that they can also play in this space and also accrue the benefits accrue benefits from investing in a fixed income instrument, which is a guaranteed return and repayment of your principal at the end of a given term. So there are efforts underway. I may not be at liberty at the moment to disclose some of the current initiatives, but they're at a really advanced stage to diversify the investor base and try and have as many retail investors as possible, also bringing their savings into this particular space, and also accruing benefits from investing in interest-bearing financial products.
When you look at the fixed incomes, or for example, a basic treasury bond interests are currently at around 14%, 15%, 16% maybe. It's a huge return. When you look at people who invest in these instruments, the margins are high, and they're making a lot of money because they're investing a lot of money in them as well. And also fixed incomes are not like maybe equities where we have maybe a stock that costs 60 shillings, a stock that costs 100 shillings. They seem to be on the higher end. How do you think you're going to increase the accessibility and affordability of these instruments? Can we have tokens? Are we going to be able to have, ease of access whereby people can actually buy them on their mobile phones using mobile money? Is that, of course, you may not tell us the details, but is that where we are heading in terms of growing this market?
Absolutely. Like I say, technology is always an enabler. technologies cuts down costs. Technology can increase access. So there are initiatives towards that particular direction without, preempting anything much. But, in addition to boosting awareness, I think one key element is being able to use technology in order to increase access. And at the same time, the entry amounts, have an entry amount that is as accessible as possible to everyone. I mean, so those are key things of whatever it is that is being developed. But I don't want to preempt anything much.
Yes.
And some of these things are beyond my pay grade. So I don't really want to comment on what's beyond my pay grade.
Yes.
But there are efforts at the moment that are specifically focused on those aspects that you've just asked about. Okay, how do you deploy technology to increase access and cut costs? Okay, how do you reduce the entry amount? How do you have an entry amount, okay, that is accessible to mtu awansi, the mtu awansi wa mwananchi? So those are considerations without being very preemptive that are part of an initiative that is being worked on.
Now, according to still this forum, when you look at what we are looking at, the objective of the forum is to really bring together stakeholders to deliberate on critical reforms in the fixed income markets and capital markets in general. So who are some of these stakeholders that are invited? The public would love to know who is invited for this particular event.
Okay. I think like I indicated earlier, we're having a keynote address from the CEO of the FMDQ Group Nigeria. And the whole idea is that, we get to hear from him about the Nigerian experience, how they walked the journey towards reforming, their fixed income space or the bond markets or that particular space where you have interest-bearing instruments. So we hope to learn from him. Okay. So who else do we have in the room? Policymakers.
Okay.
I think from the perspective of a policymaker is looking for a solution to a problem. Okay. And the problem is, how do we finance this ambitious tenfold growth initiative? Okay. And through these discussions, okay, a lot more light is shed on likely solutions. Okay. So we're going to have policymakers, regulators, because ultimately the role of a regulator is to create a level playing field where all of us can play in a fair manner, in a transparent manner. Okay. And regulators should also be as facilitative as possible. Okay. So the question from the perspective of a regulator is, what can we as regulators do to facilitate the takeoff or rapid expansion of the fixed income space? So we're going to have regulators, potential issuers.
Okay.
Now, these are private sector entities that can raise capital by issuing corporate bonds, commercial papers, sukuk. Okay, they're also going to be present. Public sector entities that can also raise capital by issuing corporate bonds, by issuing green bonds, by issuing sukuk instruments. They're also going to be present. Market intermediaries. These are the individuals who shepherd the process or transactions of capital raising. So they need to be in the house. Okay, they also need to be in the house so that we're all on the same page. Because ultimately, once a capital raising initiative is underway, it's the intermediaries who basically guide that particular transaction. So they need to be there, okay, and get to listen to this particular discourse around tapping the fixed income space to finance the tenfold growth strategy. Lawyers, we need to have lawyers in the house. The legal aspects around capital raising. Okay.
And recently we've seen lawyers really get so interested in cybersecurity, cybercrime, and things related to financial intelligence as well. I think it's a very good, important thing that we have them as well.
So we've also invited ministries. I think that falls under the policymaker category. We've invited ministries to be a part of this discourse around, the fixed income space. Captains of business, business owners, business founders. So we have a very wide spectrum, broad spectrum of participants. Okay, and we want to hear the Nigerian experience and draw lessons from the Nigerian experience. Okay, what can Uganda learn from the Nigerian experience? Okay, what is the most suitable model, okay, for the Ugandan fixed income space to take off? Okay, and you know, when you commence on an initiative later, I think one of the benefits is that you get to learn from the mistakes of others. You get to learn from you know, what they did right, what they didn't do right.
Yeah.
Okay, so you come up with a hybrid. Okay, you have that luxury of learning from the mistakes of others. You know, picking the good and avoiding what is not attractive to your specific context. Okay, so I think learning from Nigeria will give us that luxury of seeing what we can borrow, what we need to avoid, getting to understand their journey. What did it take for them to get to where they are? And by the time we're done, I think it should be very clear in our minds. What is it that we as Ugandans, we as stakeholders need to do, okay, to take our fixed income space to the next level, so that we can actually harness the fixed income space to meet the financing needs of the tenfold growth strategy, as well as to meet the financing needs of the private sector.
Yeah.
Okay, so it should be very clear about what the next steps would be based on what the Nigerian experience was, what lessons can be drawn, what lessons can be learned from the case of Nigeria.
Yeah, wise men always draw lessons from others, and that's a very amazing piece put together. Now, when you look at it's called a tenfold growth initiative, and you mentioned, however, 4 main areas of concern. Why is it called a tenfold? Where's the 10 coming from?
Well, the 10 is the fact that GDP will be expanding from 50 billion to 500.
Okay, the
so
10
times 10.
Oh, okay.
Times 10.
Okay.
So the focus areas, like I said, for a GDP to expand from $50 billion to $500 billion, we need to focus on agro-manufacturing, agro-processing, and agro-industrialization.
Yeah.
We need to revisit our tourism sector. I think there's a lot of tourism potential, and you know, we need to harness that potential to contribute significantly to economic growth. We need to look at the manufacturing sector, oil and gas, okay, and we need to harness those particular resources within oil and gas, within the mining space, so that they can also contribute meaningfully to economic growth.
Yeah.
And lastly, science and technology. Okay, how do we build a knowledge-based economy? How do we harness emerging technologies, artificial intelligence, blockchain technology? How do we harness all those emerging technologies, okay, to not only create jobs but to also generate taxes, expand productivity, you know, lower costs, convenience, you name it, okay? So those are the main focus areas that will drive that multiplication by 10 times
GDP,
of the existing GDP from $50 billion to $500 billion.
Now, extending our conversation to the equities as well, because yes, okay, the event is going to focus mainly on fixed incomes, but also other capital markets, including equities. The Uganda Securities Exchange is very key in this area. And when you look at the 4 areas we are looking at, there's agro-processing involved. And one of the things that we've seen also the USE promise is a commodities market, a commodities exchange rather, where we're going to be having prices of coffee. Coffee has been a major issue of contention, but different things, especially agro products as well, listed on the exchange. Is this also something that could be explored as an area that could lead to the growth of the, at least, let's say, the agro-processing sector?
No, absolutely, absolutely. You see, with a commodities exchange, there are certain aspects that you introduce as far as commodities are concerned. And now, when I talk about commodities, I'm not just looking at agricultural commodities.
Yeah.
Okay, even mining.
Mining, yes, of course.
Those can be
Gold.
hard commodities,
Yeah.
gold, etc. Okay, so all those are commodities. Now, what a commodities exchange does is that, number one, it creates a lot of transparency. Okay, I mean, you know where the market is at any single point, because there's a single reference point where you can get all this information. Then, secondly, in terms of pricing for either farmers, manufacturers, or producers, or miners, okay, I think what a commodities exchange does is that it introduces an aspect of stability around matters pricing. Okay, and of course, if there's stability around pricing, okay, then that encourages continuous production, or that encourages future production. Okay, so a commodities exchange will be a very important aspect, especially around. I mean, if you look at those two, if you look at the focus areas, I mean, agro manufacturing, agro processing, agro industrialization, then mining, oil and gas. Okay, so there are commodities there. Okay, and if you have a transparent market, if you have a market that can ensure producers, miners, farmers are able to get attractive prices, then that should in turn stimulate those two particular focus areas to meaningfully contribute to the tenfold growth program or initiative. Sorry.
Do you also see public-private partnerships playing a role in this particular development?
Yeah, absolutely. Absolutely. Now, like I said, the government cannot do this alone. I think the financing requires a combination of both public resources as well as being able to tap into private sector resources. Okay, so public-private partnerships will be key. Okay, the government will need to partner with the private sector, to undertake, certain projects, have certain concessions. Okay, and so tapping into private capital or tapping into the private sector to come up with the capital, and they can use different ways of coming up with this capital. Okay, they can go directly to the capital markets and make public offers. Okay, they can also raise it privately. Okay, but the point is that the private sector partnering with the public sector will be critical. Okay, in as far as raising the much needed finance, it will be critical in as far as transferring technology. Okay, best practice, you name it. Okay, so PPP is very important, not only from a financing perspective, okay, but also from technology, managerial, you name it. Okay.
Amazing. As we wind down now, what are some of your conclusive remarks, especially in terms of the mobilization or sensitization of people out there who still have doubts, in investing in the capital markets, people who are still, thinking the traditional way of, getting money, then buying land, and then I've seen a certain analysts showing that you might not even need to buy land between your 25 maybe and 35 years. And if you could use those years to invest, let's say 100,000 every single month in the fixed income market, you could be able to build a house of your dream, maybe 200 million, 300 million at 35 in the 10 years, because you're saving 100,000. But most people will be like, no, I want to put, in Uganda, you say, take a cent or whatever. I want to put my money where I can see it. And it takes so long really to raise money. And land is going to be escalating prices every now and then. So what word of advice would you give to our viewers out there in light of investing, not only in the fixed income, but also in the capital markets in general?
Okay, now, just looking at the examples that you were providing, land versus an investment in capital markets. Actually, I would just encourage you to continue investing in the land. Okay. However, okay, one of the key things about investing is diversification. Okay? I think in very simple terms, they say that you shouldn't put all your eggs in one basket. Okay, so you can have some eggs in land, have some eggs in capital markets or financial products. Okay, so you can invest in your land, but as well minimizing risk, investment risk, you diversify into other financial products, and in this case, capital markets products. Now, the beauty about capital markets and capital markets products is that once you start playing within the capital market space, you're playing within a regulated space. Okay? And when you're playing within a regulated space, okay, your investments are protected, your savings are protected. Okay, you have recourse in the event that something goes wrong. Okay, you have recourse. You're dealing with someone who's regulated. There's a regulator providing that regulatory oversight. Okay, so there's always recourse for you. Okay, this regulator will do due diligence. This regulator will do surveillance, inspections to ensure that your investments are safe.
Yeah.
Okay. Yeah. So it's important that you play within this regulated space, as well ensuring that your investments are safe. Yeah. Okay. Yeah. But diversifying is also important. Okay. Invest in your land, but also have some investments within the capital market space. Yeah. Yeah. As well diversifying your risk. Okay. If something goes wrong on one side,
you have
that is offset by your other investments within the capital market space.
And also diversification within the markets themselves is important. Yes. Yeah. Wow, amazing. Thank you so much, Mr. Dickson, for your time.
Okay.
Yeah, that's it from us, ladies and gentlemen. Thank you so much for staying tuned. I hope we shall meet at the forum, which is going to be happening on Serena. I think it's going to be aired. We're going to have Smart 24 TV live broadcast of that event. So if you're home, if you're in your office and you want to catch all the events, please tune in on Wednesday. That is the 4th of December. It's going to be live from Serena Hotel, and we hope and anticipate that you will be able to take something home and be able to use it in your financial journey. Thank you so much. My name is Anthony. Once again, remember to follow on Twitter, on YouTube, and if you missed any content, please go back to our YouTube channel and get that content. I'll see you next time. Have a good night. Bye for now.